Let's start from the top line. Very strong growth at 40%. What's the story behind that?
Well, as you know, Wole, our business is broken down really into two, the institutional business and retail business. Our institutional business grew by 34%, largely on the back of deeper relationship management, by our team, as well as relationship management also with the brokers. So management with the clients as well as with the brokers. And all of these, of course, have been, assisted by the fact that our financial base is very solid, is very attractive to the large clients who are looking for security. Our retail business, I think, has grown on the back of growing bank assurance distribution channel, not just one bank now, but perhaps 2-3 banks that we're having bank assurance relationships with, as well as a growing agency network. So I think, between these two, retail business grew by 57%, institutional business grew by 34%. I think these are really the success factors.
And of course, we know that Guaranty Trust Assurance has taken that strategy to grow its retail business directly as opposed to using other agencies and doing more of direct marketing with the use of some subcontracting to some agents. But we'll come back to the retail business, but I wanted to focus a bit on the institutional side and give us a sense of your foray into the oil and gas space, how that is faring.
Okay, this is one of the strongest areas of our institutional business. We are quite strong in this particular area, and today, we underwrite insurance business for most of the oil majors in Nigeria, as well as some of the intermediate companies that are growing up in that particular sector. And we are also particularly strong in financial services institutions, construction, and manufacturing sectors. These are really the core areas of strength of our institutional business. And
then one thing that stood out for me in your numbers was investment income, down 57%. What was the story behind that?
Well, 2010 was a particularly, difficult year for us, and I suspect for quite a lot of the other institutional investors. Equity market was up significantly, really only in Q1. So if you were not in the market in Q1, you didn't make any money from equity market. Unfortunately, we were not in the market in Q1 because we had been, we had challenges in 2008, in 2009. And so we're largely in the more liquid end of the market, the money market, and a little also in the bond market. And unfortunately, this was also the year when we had the lowest interest rates in possibly over a decade. So interest income suffered significantly from the low interest rate.
Okay, let's come back to the retail business. Looking at the numbers, we see that, yes, we are seeing stronger performance, but the retail business has not really broken even. What are your expectations going forward?
Well, first of all, retail business is broken down into three today: bank assurance, agency, as well as the high income professionals unit. Bank assurance broke even and made profit for the first time, and this is significant because it came 3 years earlier than the consultants who set this up for us 4 years ago said it would. They gave us 7 years to break even. We broke even in 4 years. Agency will take another couple of years because now the focus is to expand the agency business and put literally thousands of feet on the street to bring in premium income. So that might take another couple of years, but we believe that the profit from bank assurance will more than compensate for the other channel. The high income professionals business is also doing well as Nigeria continues to grow its middle income class. We believe that this will continue to grow, and we are also thinking of an online distribution channel possibly before the end of this year. So we believe that this year retail business will break even, will make money, and stay in profit for the next few years.
You did just mention the retail business and bank assurance. Guaranty Trust Bank obviously has been key to that success story. Obviously, the bank has decided to divest from Guaranty Trust Assurance, for no fault of yours. Obviously, it's because of regulatory issues. What's the way forward? And maybe you can first of all comment on the status of that divestment plan.
Well, we are hopeful that the divestment process will be completed before the end of Q2, but I really can't give you details. You'd have to ask GT Bank, for more details. But I can say the process is going on fairly well, and we're quite happy, with the progress. We're also very proud of relationship with Guaranty Trust Bank, who represent a major part of our heritage. And we are also proud of the other bank assurance relationships that we have, the other distribution relationships we have with other banks as well. And we believe that all of these will continue post-divestment and perhaps even increase as the other banks, see fit to close up their relationships with us post-divestment by GT Bank.
And obviously, with divestment, we anticipate more changes, perhaps maybe a name change. What do you say to shareholders that are invested in GT Assurance right now? What should they expect?
I would say that we have spent the last 7 years building a very strong foundation in Guaranty Trust Assurance. A lot of that foundation has been laid by Guaranty Trust Bank, which is a phenomenal financial institution in Nigeria. And I would say to shareholders that the best is yet to come. We are going to build a very solid and credible financial institution on the back of this foundation going forward, and this company will be quite successful going forward.
Let's go back into the institutional side of the business. Give us more insight into the strategy going forward. The market, it feels like it's challenged in the last 1 year, obviously with low private sector credit in the banking sector. That is obviously having an impact on business in general. Businesses are struggling to some extent, and of course insurance is probably not the first thing in the front burner going forward. Yes. How are you looking to grow the institutional side of your business given this business environment that you are faced with?
Well, I think that the key thing here is we have to continue to deepen relationships. We have to continue to be innovative and add value to our customers' business. We have to deepen relationships with the brokers. And I'm very happy to say that all of the leading brokers in Nigeria, have relationships with us, and we're very proud, of that fact. And we believe that if we continue to be innovative in our offering, and we continue to deepen our relationship, continue to leverage on a very solid balance sheet to actually serve the customers and make payments, on claims, promptly, and show them the capacity that we have, we believe that we will continue to grow this particular line of the business. Maybe not as fast as we will grow retail, but as we saw last year with a growth of 34%, we think that this is actually sustainable over the next 3 to 5 years.
So are you saying, for instance, that retail is the future for your business? Or is it
just
more of a balance going forward?
Not just for our business. I think for the industry as a whole, and you can see the regulators also coming up with the MDRI initiatives, and they are also looking, into all of the other areas of compulsory insurance, that are yet untapped, in Nigeria. So I think that this is more the situation for the industry, at large, and certainly for us as well. We believe that the retail market has a lot more capacity, a lot more potential, for growth than the institutional business.
I wish you the very best on that. Well, final point, just going back to your investments, income and strategy going forward. Obviously, that has dipped this year. How are you looking to reorganize going forward? The equity market, I think, is still somewhat challenged this year, even though you have, after a very good start. Going forward, how do you see the investment side of the business contributing to the bottom line? I mean, looking at the numbers for this year, for instance, we see that it's very key, looking at the underwriting profit and investment income.
Yes. Well, two things. First of all, we've had to restructure our investment team. We brought in a few more professionals who are at the top of their game. And also the market conditions this year, I think, are slightly better. Interest rates are at least twice what they were last year, and we're very, thankful for that. Bond yields have also risen significantly. The capital market hasn't seen much activity. It went up in the first 3 weeks of the year and then dipped again. But I think that with the political climate now actually clearing up, and with a lot of institutional investors seeing continuity in Nigeria's, political and economic, climate, I think that the capital market is likely to have a decent year this year. So we are in that market, and we are, of course, very happy to keep a bit of our funds also in the bond market, and a little as well in the money market.